So like I say, uDirect is an administrator, but we utilize a trust company custodian. So some self-directed IRA providers are trust companies. uDirect isn't, but we use a trust company. So there's no difference in what you ultimately get. Your funds are placed with a trust company custodian, and that's really the case for all self-directed IRAs. Okay, so that's the same. So what you want to look at is, again, you want to take a look at the person's reviews online. You want to ask people who have you had luck with. You want to look at the fee schedules and how much are people going to charge. The disparity, the difference between what some will charge and some others is big. And our fees are really on the low side. I think that's one of the things people, quick service and low fees. People really like that about us.
All right, guys, welcome again to another amazing episode. Today we have Kaaren Hall. She is the CEO of uDirect IRA Services, so pretty much focusing on self-direct IRAs. She has 500 million under management. She has a very large array of different skills and expertise. And we'll dive into that right now. We'll let her, go from the beginning. How did you start? Because I see here you've done everything from mortgage to raising capital, you name it. So let's talk about how you started and where you're at now, how you got there.
Well, I went to college, and in college I was a journalism major, and then I switched to being a broadcasting major. So radio, TV, and film, right? So I became a radio announcer, and that led a beeline into real estate, But I did that. No, I'm joking. I did that for 17 years. I was on the air and had fun, but you just don't make any real money. And so then I got a real estate license, and I started selling real estate for a year just to learn and long story life. And I got into eventually, after selling real estate for a year, I did some property management too at the time. So I managed buildings in Seattle, and that was really a lesson, having to evict people or doing rentals, and how does that work and what are the rules and all this. So that was a great education. And then I got into mortgage loan servicing, and I did that for about 8 years. We called it cleaning up after the elephant. After the loan is made and then people are going to start making their payments, well, then what happens? And so that's what I did. And I'll tell you, that's a lot like what I do right now. And then after that, I got into loan origination, mortgage loan origination during that refi boom, starting in about, I can't even, how long ago was that? 1999. That's a long time. And and so then rode that out for a while, and was in mortgage for a long time, originating. So, then we get the crash, right? We get the crash in 2007. What are you going to do? So in 2007, I was looking for a job after being in mortgage. And a friend of mine said, hey, I know some people, they're opening this office, this financial office. I told them they have to hire you. So I went and interviewed with these people. They hired me, and I opened an office for a self-directed IRA company here in Irvine. So that was going pretty well. And then after 2 years, I left and I started my own thing. And I hung my own license, or not license, because we're not licensed, so we don't need to be. But I did hang my own shingle and started a self-directed IRA company in 2009, like right in the middle of the recession, right? And so, wow, that was something. So I had a laptop and a borrowed desk and a borrowed chair. Just go for it. And now we have over 5,000 accounts. Like you said, Oscar, $500 million under management, and a lot of happy people that are taking their retirement money that they have right now and investing it outside of Wall Street. So that is the path that brought me here. And you just have to stick to it. And there's so much to know about real estate. And it's great you're doing this podcast and teaching people, because if one thing doesn't, if one thing isn't your bag, like maybe multifamily is for you, maybe notes are for you, maybe you'll find your niche. Definitely real estate appeals to a lot of different personality types.
Yeah, no, absolutely. And let me ask you this. So you mentioned something key there. You don't need a license. Could you elaborate a little bit more as to the qualifications and why you don't need a license to do what you do?
Sure. So when I left the other company, they were just like uDirect, an administrator, a third-party administrator for self-directed IRAs. So that's what I did. I contracted with a trust company custodian. And then I said, look, I'm going to open all these self-directed IRAs. I know how to teach and facilitate and do the customer service and everything. And so I enlisted their services to hold the cash while I helped people learn how to self-direct. And so I placed all the money there with that trust company. And the trust company is bonded and insured against theft and fraud. And that's been going on for over 11 years. Now we've had that relationship.
Wow, that's amazing.
Yeah.
German, I see your wheel spinning.
No. I want to get into the point, the steps on how people can do it, but I know that's gonna go further along the process. So go ahead, Oscar.
So then, you go through this process and you decide, okay, I'm gonna start my own self-directed IRA company. What steps can you tell us as far as, making that transition from a, mortgage originator to saying, I'm going to open up, and how difficult? Do you need your own capital to start that? What is that whole process?
That's a great question. When you start a company, you take a look at what your expenses are going to be. And I might have been able to do it by myself, but I did get some help. Talked to a few friends. I said, look, I need to raise a little bit of capital. And so two friends of mine helped me find the capital for my business. And so I had two investors, and they invested with my company. And after 5 years, I bought them out. But they really, what I say is they gave the company the gas to get the plane off the ground. And then they made a great return, and we have a great company. And so now I'm the sole owner of the company. They had a small percentage. And so they bought in for a little bit of cash for a little bit of equity. And then I bought them out. So
the capital that you needed, I'm just curious, is it because of overhead? Is it insurances? Do you need to have cash reserves, or?
Well, it was to give myself a comfort level, really, that the funds were really to keep me alive and let me pay my own mortgage payment while I was, getting it going. But somehow it just all worked out, and there was enough, as we were getting the company off the ground. I also have two kids who are now out of college, and so they were small, or in junior high at the time, and so I helped them, and obviously raised them, and so it was me and the kids and the mortgage, and we just made it happen. So I don't know. I don't know how we made it day to day.
No, I love the story that you said, hey, you just started, you did it. You don't know how it happened, but we have so many stories like that, and that people, take action, and somehow things, develop, and they get bigger and bigger. Exactly.
But
That's
how
awesome.
it works. It's when you've got a fire inside you to really do something, and you especially when you've got vision and you can see what the end result's going to be. And I was very clear on what I wanted to do, how I was going to do it, what it was going to look like. And again, I'd been in the self-directed IRA industry already 2 years, so I knew a lot of people. And how else do we move forward? But it's with our friends, right? And my friends, they stepped up. Hey, this is Kaaren. We'd like for you to meet her. You open your account with Kaaren. And if it wasn't for my friends that run real estate investment clubs and so forth, believing in me, because people would call in the initial days and they'd say, hey, we'd like to open an account with you, but how many accounts do you have so far? And I'd be like, 6. Really, 6? Are you sure? I said, well, and so I just, had to sell it, and it was the right thing to do. And it's been great. It's been a wonderful and super educational, building kind of a journey.
So let's talk about the selling. How did you sell that, right? Because it's not just a self-directed IRA thing. Is when you started out, is that that mindset and that limited belief that, man,
I don't have anything. I don't have anything for myself, and now I'm trying to sell this to a lot of people.
Yeah. Or people call it fake it till you make it, right? But it's not really fake it till you make it, because you're not faking it. You're actually
have a vision,
a vision, a product. I could help people. People know that I'm honest and that I care. And I can't tell you how many people's moms' accounts I have opened, because they know I'm going to take care of them. My mom wants to open an account. Kaaren, will you help them? Sure, I'll help them. And so a lot of the real estate gurus have opened accounts with me, and I've just had amazing support. And what a blessing, right? What a blessing. But I think it has to do too, understand that when I started the company, I also had all this background and all this knowledge about real estate, how it works, how mortgages work, the whole process, all the jargon. I've had a real estate license in Texas, in Washington State, in California, had an insurance license. So I had some, financial knowledge, like a foundation of financial knowledge. But also, I'll tell you what really helped, the number one thing that really helped, I would say, is I started growing my database. The people who have been my managers and mortgage companies and things like that said, hey, if you want to do well, start. Then it was a Rolodex. Okay. That's what it was called. And, those little paper cards, but it's your database. It's who do you know? And so I started building that, and I would go to events and built my database. I have probably 120,000 contacts now. So.
Wow. That's amazing. Yeah. And I think you're spot on. I mean, it's your network. How can you grow it? How can you nurture it, right? How can you provide value to them? And then
that's it. No, I got to say, it's how do you provide value to them? Because it's like, okay, you're nice, but so you've got to have that substance to back it up. Okay, I'm nice, and I can help you retire using alternative assets. I can help you use self-directed IRA accounts to get the capital, your deals. And so it's, really substantial offer too. And that really benefits people. So it was a marriage of all those things.
Okay. So let's talk a little bit about, because most of our audience they have heard before, difference between self-directed IRAs and regular IRAs, but what would you say your company does different maybe from other self-directed IRAs? Mm-hmm. And how can you help them invest, and in what, different non-traditional investments, if you have any that are different from others?
Sure. So the first thing is we don't sell any assets at all. We don't sell you an asset. It's self-directed. So you come to us with the asset that you want to invest in, but we're all about education.
Oh,
right. So podcasts like right now, teaching is the number one thing. It's so much about education, investor education. I also have a real estate investment club called Orange County Real Estate Investors Association in Orange County, California. And there's, I'm sitting there now, but I'm not at the beach, but it's close. But we teach people like, what's a 1031 exchange? How do I invest in ADUs, accessory dwelling units? How do I save money on my taxes? So we have different speakers speak all the time. So that's a side hustle, right? So I've got that over there. But with uDirect IRA Services, what makes us different is it's really the service that we provide and how fast we provide it. Sometimes with real estate, I think this is the big difference. Since I come from that background, everyone who works at uDirect comes from that background, real estate. And we know the timing. We know timing's of the essence. You can't wait a week on a deal. You need you need it now. So we queue it up and we set your expectations. So we have 3 departments to help you open the account, get it funded, and then invest. And along the way, we're setting your expectations of what it takes, how long it's gonna be, what you need to bring to the table. For example, we need a direction of investment form, simple form, and the supporting docs for what you're buying. It could be, if it's a private placement, like a syndication, we need the subscription agreement, right? And the operating agreement. If it's you're buying a house, we need the offer to purchase, right? You're buying a note, we need the note. Performing and non-performing debt, we need the agreement and that instrument. And we review, and we're not going to say if it's a good or bad investment, because that's not our place. But as long as it's titled correctly, as long as the IRA is actually getting an asset in exchange for the money, we fund it. So you open the account, you bring the money into the account from wherever it may be now, then you fund that account, and then you invest. And then 100% of the proceeds from that asset go back in the IRA. And if there are any asset related expenses, the IRA pays them.
So let me ask you that: if someone comes to you and says, I want to do a self-directed IRA, but I don't know what to invest it in. Yeah. Do you assist in, because probably they're looking for a private investment or something to accelerate their gain, right? So is that something you help provide them? Hey, look, obviously non-committal, but we have these opportunities for you if you are interested. Is that something you do?
Well, what I'm going to say if someone asks me that question is that, first off, how much money do you have to invest? And they say, oh, I don't even have an IRA. Then I say, well, hey, and then make a contribution, because you'll probably get a tax break. Pay yourself instead of the IRS. Start an IRA. So today it's the month of November right now. So if you make a contribution today for this year, then after January 1st, you can make a contribution for next year. So now you've got 2 contributions, which if you're under 50, would be 12 grand that you have in just a matter of a couple of months. If you had the money to put away and contribute, you could do that. But or maybe you used to work somewhere. A lot of people have changed jobs. You can take that old 401k and move it over. So it's how much do you have to work with? But then I would say, if you're looking like, what do I invest in? Find a meetup group. I mean, gosh, listen to your podcast, listen to what are people doing? And then you need to really feel people out for who do you trust? Because when you're investing, it's not just finding the asset, it's finding if you're going to invest with someone, can you trust them? Talk to people who've invested with them before. Does the asset sponsor perform? Do the investors get paid back? That's super important. And I want to tell you too that there are websites like, and if, you can email me and I'll say this again if you want, but it's called FINRA and NASA with an extra A, and there's the SEC website, and even AARP, where you can type in the name of the asset sponsor and see if they've been barred or suspended or ever, slapped on the for their dealings, as a broker dealer. So you can check out that for secured investments, for SEC approved investments like private placements. So Google them, go on, some forum like Bigger Pockets or just on social media and say, hey, I'm thinking about doing this. What do you think? And let the community respond. That's what we can do right now. And then, and check them out and then go for it, because there's so many opportunities, so many.
So let's say, and I'm curious, let's say, for example, I have a 401k or a TSP. We have a lot of military followers as well in the audience. So I have a regular 401k, a TSP or whatever, and I want to start a self-directed IRA, and I want to invest it. Like I have this multifamily deal that I'm trying to put my money into. What does the process look like? Where do I start, and what is the timeline? How long does it take for me to start it and actually be able to deploy that money to invest it?
Yeah, the timeline, isn't that? It's all about the timing. It really is. So if you're in the military presently, they won't let you move your TSP, but when you leave the military, then you can do what's called a rollover. So you can roll that money over into from the TSP into a self-directed IRA. So that's the first thing. So you open an account, takes 24 hours. Then once your account's open, you contact your, if it's a rollover, you contact your previous employer's administrator and say, hey, please roll my money over into an IRA. And they say, okay, and we give you the details and the money gets moved over. And in that case, when it's a previous employer plan, it can take up to 10 days. So expect that.
Okay.
And then, so that's going to happen. So while we're waiting for the money to come over, then you can give us your documents. We're going to review them, take a look, make sure everything's vested correctly and so forth. And once we get everything put together and get it all, then we're going to submit it for a final compliance review. You get approved, and then we just sit there, wait for the money to clear. And as soon as the money's available, then we send it out by, check or wire, whatever, as uDirect. See?
Yeah. That's awesome.
I love that.
It's like, when the day you open the account, the fastest we've ever done it. In fact, the fastest it's been done in the industry, to my knowledge. I do sit on the board of directors for the Retirement Industry Trust Association. So we have this conversation, at the cocktail party afterwards. But the fastest ever is 4 days from opening to a funded deal, because we're waiting for that money to come in, you see. So 4 days is the fastest in the industry that I've heard of. But typically it'll be a week or so, if we're waiting for the other money.
Got it.
So what should people be looking at as far as, hey, this self-directed IRA is legitimate or not? Because obviously you don't need a financial license. And personally,
right.
I've seen some pretty crazy episodes on American Greed. So,
yeah.
So what should people look at?
So okay, here's the thing. So like I say, uDirect is an administrator, but we utilize a trust company custodian. So some self-directed IRA providers are trust companies. uDirect isn't, but we use a trust company. So there's no difference in what you ultimately get. Your funds are placed with a trust company custodian. And that's really the case for all self-directed IRAs. Okay. So that's the same. So what you want to look at is, again, you want to take a look at the person's reviews online. You want to ask people who have you had luck with. You want to look at the fee schedules and how much are people going to charge. The disparity, the difference between what some will charge and some others is big. And our fees are really on the low side. I think that's one of the things people, quick service and low fees. People really like that about us.
Okay. Awesome. And then as you've progressed through this journey, where do you see yourself in in the next year, in the next few years? What are your short-term, long-term goals?
What's my 5-year plan?
Yeah.
My
Or your short-term, whatever is
The most
short-term.
common.
Yeah. Yeah. I know.
short term is to take my dog for a walk, but my long term goals are, we've got a wonderful team. And so perhaps to expand that team, and I know that my team, they have goals of things that they want to do, and maybe in a different city or something like that. So, just to continue to expand, offer services, offer education. And there's no limit to how much of that you can do, especially with the internet. In fact, I have plans in the works right now to 2 really big projects. And they're both about education. They're both about investor education. So those are my plans to just keep people educated. I got to tell you, because the number one thing about self-directed IRAs is again making sure that you're making a good investment, and that's due diligence. Listening to a podcast like this, you talk to a CPA or talk to me. How do people do due diligence? And I've mentioned some of the websites you can go to, because when you lose money, what happens is, you don't get to write it off, right?
Mm-hmm.
Self-directed IRA loses money. So just really talk to people, make sure that you feel like you're making a good investment, and that you feel really good about it, and that you can see from beginning to end before you pull the trigger and send your money
What
out.
type of assets, besides, let's say, well, we focus on real estate, but what other type of assets can people invest in besides real estate?
Yeah, so much of it is tied to real estate, right? So, but there's
Yeah.
precious metals. So that wouldn't be like collectible coins. It would be, has to have a certain level of purity. So it would be like gold or palladium or platinum or silver. And you can invest in those with the self-directed IRA, and then then we store those metals. So we custody the assets, and that's what we do. We have custody of the assets. There's notes. Your IRA can be the bank and lend money to people. And your IRA can also buy performing and non-performing debt, buying paper, right? I'm sure you're familiar with that. And of course, that paper is usually tied to real estate, but even factoring, like accounts receivable. There may be a private placement that's invested in factoring, and you invest in that private placement. So in debt and equity.
That's really interesting. So you could do a self-directed IRA and pretty much do private hard money lending through your IRA.
Yeah, you can. As long as the rates are legal. Yeah.
Yeah. And see, I just learned something new, because I knew you could buy notes or things like that, but everyone has different strategies you could do. So that's why it's self-directed. You're flexible with that money, and as long as you're making a return, right? So wow, that's pretty good. So let me ask you, as far as, obviously, and we talked about it beforehand, we're not going to dive into politics or any of that, but how does the upcoming results affect self-directed IRA? Is there any benefits to it? Do you see something maybe going away? What do you see being in?
Okay, well, since the election hasn't really been officially called yet, I'll say that if it's Trump is super pro retirement, pro saving. In fact, when the tax plan was passed last, 401ks were kind of on the chopping block, and in a sense, and there's also something called Rothification, where everything was going to turn into a Roth IRA, and all that got, they said, Trump's like, no, we're not going to do that. Leave it as is. Being able to save for retirement is too crucial. And what I'm hearing about the Biden plan is, one of the things is he would like to make 401ks more inclusive and include part-time employees, not just full-time, but part-time employees in 401k plans. So that's not a self-directed IRA, but that's an employer 401k plan. Also, instead of giving you a tax break for contributing to a retirement account, the Biden administration says, or the plan is saying that what they would rather do is, you don't get a tax break, but instead you get a tax credit. So, that's a technicality, isn't it? But you get taxed, but then you get a credit. So that we'll see how that works. And right now, this isn't in stone yet, but that's some of the ideas that they've alluded to. Also, the Biden administration is also looking at we call it a catch-up contribution. Once you're over 50, you're 50 or older, you get to put a little bit more away. You can contribute more to a retirement account. So they're talking also about in the Biden administration about adding a catch-up contribution for care workers. So if you're a care provider and you're helping people, and you're not going to be able to really store away a lot of money. It's hard to work, especially if you're taking care of somebody. So you would get the benefit of being able to put more in your retirement account than other people because of your service.
Oh, that's really good facts. No, we appreciate that. That was very, very how can I say this? Not balanced, not biased. Yeah, no, that was very good. Appreciate that.
I'm curious to ask you because Oscar talk about the hard money lending, right? If you basically become the bank at that stage and you lend your money, can you talk to us about taxation at that point?
Mm-hmm. Mm-hmm. So when you are investing by making loans, and by the way, I know some really successful investors who started off making microloans with the Roth IRA, and I know one that's built his Roth up to $1 million. How would you like $1 million tax-free money?
Yeah.
But he started off making little microloans on mobile homes, okay, and he would buy the debt and sell it and make microloans. So that's a story for another time. But any proceeds that come back into an IRA or a 401k come back tax-free in a Roth if you meet the qualifications, which is 5 years, or you meet 2 qualifying road posts or whatever milestones. Tax-free in a Roth or tax deferred in a 401k or a TSP, 403b, 457, traditional SEP, simple IRAs. All that is tax deferred. So you typically with that today, you get a break when you put the money in. As long as you don't make too much money, you get a little tax break now. The money is in there, and you get to compound faster because you're not taxed until you actually withdraw the money. So until you withdraw the money, it is not taxed. So you make an investment, you get your proceeds back. Well, 100% of those proceeds can go back into the next deal. So you can use all the money you just earned in that deal for your next deal. It's not diminished by tax, so you can compound faster. And that's one of the great things about using a self-directed IRA is that ability to compound your earnings.
Nice.
That's really
and you don't
cool.
pay tax until you take the money out.
That's nice.
Yeah.
Love it.
I see the
All
wheels
right.
going in your head.
No, yeah, I have a friend of mine that uses her 401k. It's not that's why I asked the question, because she does. I wouldn't call it microloans because she lends like really small amounts of money, and then she gets it back, but it's with her 401k. And it was pretty interesting because actually I'm gonna give her that idea and be like, hey, you can actually do better than what you're doing right now. Because she lends it to friends and then it comes back with a little bit of interest and she puts it back. But that's pretty interesting. So I love it.
And then due to COVID in the situation, and maybe I misunderstood, but is it correct that right now you can roll out of a 401k, pull your money out and not have to pay anything?
Well, yes and no. So that's called, what you're talking about is called the CRD, the Coronavirus Related Distribution, and that's part of the CARES Act. So until December 30th, okay, you can take $100,000 out of a 401k, but that would be as a loan that has to be paid back to the 401k.
Gotcha.
Or if it's an IRA, you can take it as a withdrawal. So if it's an IRA, what happens is you take the withdrawal, you have to have that much money in your account to start with, obviously, but you can withdraw that up to $100,000 if you've been affected by coronavirus. Now, a lot of people have, maybe you lost your job or you got sick or something like that. So there's that burden of proof is on you to prove that you were affected and that you're eligible. But if you're eligible, with the IRA, you take the money out, but you don't owe tax the first year. So if you took money out, like a withdrawal in 2020, when you pay your 2020 tax, you have to pay the tax on whatever you withdraw. But with the coronavirus CRD thing, you get 3 years to pay that tax. Okay, so you can pay $33,000 tax on that, on the money that you took out. But it is a withdrawal, and you do pay tax.
And I can't talk. Personal experience, because I took my TSP. I withdraw my TSP, and I know that I gotta pay in 3 years. I gotta pay the taxes on that. And I mean, for the listeners out there, it's a pretty easy process. It took actually like 2 days to get the money. So yeah, if you need the money, invest it in something else, and yeah.
Well, if you need the money, that's one thing. But I gotta say, this retirement money is so super precious. It's really hard to stick money away for retirement. If you're limited in how much you can contribute, because you are limited, growing a retirement account is the best thing you can do. And the minute you take that out, that's precious money because you can't just slam it back in there. You can't put it back.
Yeah.
And so really make sure before the retirement account is the last thing you should touch.
Exactly. Or I don't want to say that, I did it and hey, go ahead and do it. It's just,
yeah, okay, that's
I had a plan to retire, to reinvest it in our business. So yeah, that was the plan, but the process is pretty easy. If anybody's looking into it.
Yeah. And you don't pay penalty where normally you would if you're under 50. So that's true. But I mean, only take it if you really need it.
Yeah.
Definitely going to need it.
The only reason I really asked is because I wasn't following completely, but I knew the CARES Act had something like that. And I was curious to see if you could just roll out now from a traditional IRA or Roth IRA into a self-directed IRA and not have to pay any withdrawal fees or any of that. Because it would be beneficial if people wanted to do that. And if it was the right time right now, then people should know that it is the right time right now. But
when you do a transfer of an IRA or a rollover from a previous employer plan, it's not a taxable event. So just to say that's one thing.
Okay.
When you want to put money in a self-directed IRA, the movement from one custodian, like maybe TD Ameritrade or Charles Schwab or something, into a self-directed IRA, it's not a taxable event as long as it's direct. It goes from custodian to custodian. This coronavirus related distribution is obviously something else that's pulling the money out for your personal use. That is possible, yeah. But when it's a custodian to custodian transfer, no tax.
Oh, perfect. Even better. Yeah, that's good to know. See, yeah, I was thinking that you had to pull the money out and then move it into a self-directed IRA. But that is awesome to know then. And
it goes directly. Well, you can do it where you touch it. You can have what's called a 60-day rollover, where you can take the money and put it in your bank account, have it as long as it's in a retirement account within 60 days, you're not taxed, but you can take a mini loan to yourself for 60 days. And whatever you don't put back, you get taxed on.
Nice. That is awesome. All righty, German, you got anything else?
No. I love the information. I like the fact that I mean, it's the process is easy, and very, very interesting. I love it.
No,
I love it. That I might add, if it's okay, unless we're out of time.
Yeah. No. Go ahead. Whatever you want to say.
Well, I think that if you're trying to build your personal wealth, right? Aren't we all? And you don't have a lot of money right now, but you've got the ability to put deals together. Maybe you're going to be a bird dog, or maybe you can wholesale. Maybe you've got some skill. Remember that even if you're not building your own retirement account, you can go to other people if you've got a skill in real estate and say, hey, look, I'm doing this project. I need investors. Or, hey, I found this property. I'm 50% into it. I need a 50% partner. Do you want to use your 401, your self-directed IRA to partner with me? So understand that self-directed IRAs aren't just a way to save for retirement. It's also a way to use other people's money, right? OPM, and have other people invest with you. They'll die. You won't believe this. $31 trillion pool of money to draw from in American retirement accounts. So if somebody says, well, my IRA can't invest in a house, that doesn't make any sense. What are you talking about? It's like, yeah, you can. And you've been able to do it for 45 years. So a long time. So just know that IRAs are a source of capital for your deals as well.
No, absolutely. That's great information right there. No, thank you so much. And we appreciate all the information you provided us. So if you can, let the audience know, where can they find you? How can they reach you? And open up a self-directed IRA account.
That's right. Do that today. It's our website is the letter U, uDirectIRA.com. And we're all over social media. You can find us on Facebook, LinkedIn, Instagram. What else is there? I mean, we're everywhere. And so what you can do is, type, and then there's a community of like-minded investors. We have a group on LinkedIn called Self-Directed Investors Networkers. And we've got thousands of people on that group, so you can join. And so not only can you reach me through our website, but you can also, click in and connect with other self-directed IRA investors on social media.
No, that's awesome. Thank you so much. And yeah, people, go ahead and flood her website if you can, and leave us a 5-star review. And I'm just going to say this too: if you're into the financial freedom, independence, retire early movement, whichever movement you're a part of, well, all you're doing is paying down debt. but not accelerating your investments and your wealth, then all you're really doing is paying down debt. So you need to realize that, and there are other avenues other than normal traditional stock and bonds. And while we always promote real estate, I mean, a self-directed IRA is a clear way into other non-traditional investments, notes, you name it, minerals. I can only imagine that the floodgates open into anything. But yeah, so we're out, and thank you so much for coming on. We really appreciate it.
Thank you.